Welcome to Morning Brief, presented by Robinhood, the home to commission-free trading. I'm Julie Hyman. Let's get to the three things you need to know today. First up, a mixed picture for stock futures this morning. The AI-led rout in tech stocks is pressuring the NASDAQ, but Dow futures are higher after that blue chip index, as well as the S&P 500, closed at record highs in Thursday's trading session. That's a positive sign for investors as the stock rally broadens out beyond tech, which of course has been the market driver this year. All of the 11 S&P 500 sectors are in the green year to date as the benchmark looks to close out a third year of double-digit gains. Plus, the AI rout is hitting Broadcom shares. The chipmaker reported better than expected earnings and revenue and issued a strong forecast for the current quarter, but it wasn't enough to send those shares higher. Its sales outlook, which was driven by AI demand, did not meet investors' high expectations. Shares began to slide during Broadcom's earnings call when CEO Hock Tan said Broadcom has a backlog of $73 billion in AI product orders that will be shipped over the next 6 quarters. That number disappointed some investors, and Tan sought to clarify that the figure was a minimum. And Lululemon shares are jumping as its CEO announces his exit. Calvin McDonald will depart the company in January. He'll be temporarily replaced by the company's CFO and the chief commercial officer. Analysts and investors are cheering that announcement. The stock had declined more than 50% this year and has underperformed the S&P 500 for years. But Lululemon's latest earnings results weren't all bad either. Its profit and comparable sales beat analysts' expectations. The retailer also boosted its full-year outlook. Let's get a check-in on stock futures right now. We have the Dow and the S&P. Well, the S&P just barely extending their record closes that we saw yesterday. The NASDAQ is not quite there, which is an interesting story in and of itself that we'll dig into. And NASDAQ futures are reporting downward along with Broadcom. So let's talk more about all of this and dig into our top stories of the day. Joining me now, Yahoo Finance senior reporter Brooke DiPalma, Yahoo Finance tech editor Dan Howley, and Alex Morris, FM Investment CEO and CIO. And Alex, I actually want to start with you here this morning. We had the S&P close at a record. We had the Dow close at a record. We had the Russell 2000 close at a record as well. And we do seem to be seeing a broadening out here. What does that imply to you about, how much further the rally can continue?
Well, I think that's generally good news. I mean, we've all been complaining about concentration in the market for quite a while now. So seeing it broaden out should be welcome relief. I think many folks that were worried that there might not be much to the broadening, and I think that's probably overblown. What's been going on in AI stocks and the technology they're creating is finally doing exactly what every one of these evolution and revolutionary cycles is supposed to do: find its way into every other company, benefiting from it or providing services to more than just the Santa rally, but we'll take that for the time being.
And specifically here, I was looking at the numbers since November 20th, because that's sort of when that previous drop that we saw in the tech stocks kind of stalled out. What has fueled the gains since then? It's not tech stocks, or at least it's not exclusively tech stocks, sort of to your point about the broadening. If you look at the best performing group since then, it's actually consumer discretionary, interestingly enough, and not just because of Amazon, which happens to be in that group. It's financials and it's industrial. So Alex, as we look at the continued AI-ification of everything, I guess is how you would say that. I mean, tech and comm services in there too. But I'm just curious how you're thinking about playing it from a sector perspective.
I think if you were in tech, you're probably going to stay there. It's going to be hard to move money out of that, and that would make some amount of sense. But most of the tech stories and the AI stories we're hearing now are data centers. They're traditional construction. And they're buying things, either aided by AI or us, using AI technologies. We're paying them directly. So I think you really want to be now in the picks and axes business, all of the things that are supporting that movement. And let's face it, consumers love to spend. We love to spend in December, and we're probably going to spend an awful lot this year. So anything that, whether it's the Lubus and the faux boo-boos I see being sold in New York now, or anything in between, if it's something that seems to have the ability to find its way to consumer, it's probably a good stock to own today.
All right, let's talk more about the technology trade then. And Dan, I want to go to you on that, because here we have Broadcom, which is really seen as participating in the picks and shovels or picks and axes or whatever you want to call it, the infrastructure build out, and yet the stock is trading down, which is kind of what we've seen with NVIDIA, for example, in the past, even when it comes out with what seem to be positive earnings.
Yeah, and I think part of that has to do with kind of the response that Hock Tan, the CEO, had kind of given with regards to what makes up their picks and shovels, their XPUs. I mean, XPUs, TPUs, tomato, tomato. It's basically ASICs, which are application-specific integrated circuits. Custom chips. That's all you got to know. These are the custom chips that Broadcom builds for companies like Google. And so, there's a question saying, hey, look, there's this narrative going on where all these LLM companies want to build their own chips. And, does that mean that we're going to see more companies in the AI space just go forward and start doing that? And Hock Tan had basically said, I see this concept of customer tooling as an overblown hypothesis, which frankly, I don't think will happen. Basically throwing cold water on the whole story. And that was, essentially saying, look, GPUs from third-party companies like NVIDIA, AMD are evolving so fast that it's really kind of difficult to keep up with the XPUs, the TPUs, the ASICs to kind of match what those companies are doing. And so, I think that's a big part of it. The stock was trading up after the results, just because they had 18 billion in sales, or I forgot the exact number. But that I think is indicative of why the stock is down now. Just because, when the CEO comes out and says, don't be banking on this to be huge, it kind of scares investors a bit, I think.
Well, and you and I were talking a little bit before the show about the sort of difference in style, at the very least, between a Jensen Huang and a Hock Tan, right? I mean, it's not like Broadcom's been a slouch. The shares are up 75% this year. They're seen as one of the bedrocks of this whole build out, right? But Hock Tan kind of doing his own thing, not flying to Washington, at least that I know of. And so it's just interesting, the different approaches that we have seen some of these different companies take.
Yeah, I mean, it is interesting how we're seeing, Hock Tan basically just, do his own thing. I mean, as you said, Broadcom is a part of this, right? They are now an AI company, and they said, look, they were talking about he was talking about the other businesses that they have, saying, look, it's mostly flat over here, just because I think he said the AI sales are just kind of sucking the oxygen out of the room when it comes to general IT spend. And so that's why the other businesses, not the AI side, are kind of just, stable at this point. But it is very interesting just to see that kind of, backing away from the kind of euphoric statements or, projections that you may see from other companies like NVIDIA or even AMD, which said that, the market by 2030 would be blowing up,
right.
And so you do have this dichotomy of, don't believe what everyone on the street says. I think he basically said, don't believe what you hear is gospel. We're going to do this essentially, but don't expect it to be, a huge, forever expanding part of our pie.
Yeah, right, exactly. And in other AI news, I should say, the president signing an executive order basically saying states can't make their own AI regulations. And this is seen as a win for the industry because some of the state regulations have been a little bit more stringent than what the federal government may put in place, right, Dan?
Yeah, and so this is, kind of a way to put handcuffs almost on states like California and New York, bigger states, Texas, that may want to pass their own laws and have a huge amount of users. And so you kind of default to what the most restrictive of those big states is, when you're setting up your AI business, right? Or you're trying to follow those rules. It's kind of the way the auto industry follows what California does. And so basically there are rules across the states when it comes to AI. And so the industry is saying, look, we can't do that. It's a lot to follow. And the federal government, obviously, President Trump has been working closely with a number of the AI companies. And he basically says he's going to set up this task force to go ahead and potentially punish states that have their own AI rules until there's a federal rule established. here's the thing. When it comes to stuff like privacy, security, people have been begging for a national law forever, just because there's just this hodgepodge of state rules, and you really never know what's going on. The whole idea has been you have one single federal law that is established, and companies can all work through it. That would seem to be a good move for AI. The problem is, as I said, we've been begging for it forever. And so whether or not we actually see a federal law related to AI now remains to be seen, because there's still that privacy law, there's still that security law. There's been talks about it. Different members of Congress have tried to bring it up, just never goes anywhere. And so I think that's the general fear now with AI, is that if we couldn't get that passed, then what's to say we're going to get something with AI? And I think that's the general line of thinking here now, is that, okay, the states had something. It is a hodgepodge. It doesn't really make sense to have that many laws for one industry. What kind of laws now can be established, though?
Yeah, I mean, and there's also stuff making its way through the courts. So that's another way that we might see some regulation that an executive order is not going to, I don't think, do anything about. Let's talk about another story that I'm excited to talk about this morning, and that's Lululemon. I followed this company for a long time. Brooke, I know you have too. And so interesting to see yet another CEO bite the dust over there, even as the quarter looked pretty decent, right?
Yeah, absolutely. I mean, to give to Alvin some credit here, he did join the team in August of 2018, and his tenure has been 7 years, which, believe it or not, has been one of the longest tenures for a Lululemon CEO since Chip Wilson, the founder, was at the helm for many, many years. But it's been quite a different cadence that we've seen over time. It seems like there hasn't been necessarily a good step down of a CEO executive throughout Lululemon's history. As you saw on your screen just now, this company has had executives sort of step into this role, take the helm for a few years, and then leave after some sort of controversy. And so it remains to be seen, what exactly led Calvin McDonald to step down. But ultimately, what we do know is that there definitely has been pressure from founder Chip Wilson.
I mean, listen, he stepped down because the company hasn't been doing well, Brooke, right? Like
fair point, Julie. But to see how it was performing just a few years ago, we did a story when it entered the S&P 500 back in 2023, in October of 2023, and at that time, analysts across the street were saying that this company has outperformed. This company has done extremely well. But now in these past 2 years, Lululemon has struggled to figure out which is the right color that Americans want to buy their leggings for. Green seems to not have been it, and it seems like despite the fact that Calvin has tried to have new innovation, beyond that belt bag that did so well for him 5 years ago, it just hasn't panned out. Even he entered the space into sneakers, into golf. It seems like nothing really was able to stick as of late.
Yeah, I mean, we talked to Randy Connick over at Jefferies last week, and he basically said, they got away from their core. Not just necessarily with the products you were referring to, but also like exploring patterns, following the trend, chasing trend a little too much, maybe. And this, of course, is at a time, as you well know, when there's increased competition from Vuori, from Beyond Yoga, from Alo, some of the other brands that are out there. But to your point, Chip Wilson, who was the founder of the company and the original CEO, had to step down after he made some controversial comments, right? Christine Day stepped down after the company was not doing great and had some quality control problems. Laurent Potvin stepped down after he had a relationship with an employer or contractor. And now you got Calvin McDonald after the stock comes down, also stepping down. So who's going to be next? We've got these co-CEOs now. I know our Brian Sazi posted on Twitter who his dream picks are. I think Fran Horowitz was at the top of the list there. Well, we'll let him give his rationale a little bit more for that. But, this will be an interesting situation to see who's next.
And I think what's really interesting, too, is Anisha Sherman of Bernstein pointed out in a note this morning. She said specifically that as momentum has slowed following a strong Thanksgiving shopping period and lowered on margins from higher markdowns, she essentially said that this was expected to end up happening, but it kind of came sooner than expected. It definitely shocked the street yesterday, right after this earnings broke, because they did beat Wall Street's expectations. They also raised their outlook just for earnings alone. But then this definitely taking the forefront to conversation. We see the stock moving higher in in pre-market trading this morning because this was expected, but definitely sooner. And it seems like there's sort of this catalyst, this need for this company to really step up its game here as it's struggled, as you noted, to keep up with everyone else who was a newcomer in the space who was clearly winning. I mean, Aloe kind of came out of nowhere, and to think about the influence that it now has, even on young Gen Z, Gen Alpha, even, is absolutely extraordinary. And that was something that Lululemon did so well. I mean, even during the pandemic, at-home fitness was so hot, and Calvin stepped in to go acquire Mirror, and that didn't work out. So it just seems like tons of missteps that Lululemon has had over recent years after that run-up of athleisure wear that really got few post-pandemic.
Yeah, for sure. Little known fact, Dan Howley, when we show him in a shot, he's got his nice stuff on the top, Lululemon on the bottom. No, I don't know. All right, Brooke and Dan, thanks so much. Alex Morris is sticking around with us. We'll talk to him more in a moment. And coming up on Morning Brief, we'll bring you today's top trending tickers and count you down to the opening bell. Welcome back to Morning Brief, presented by Robinhood. Now time for some of today's trending tickers. We are watching cannabis stocks, Fermi and RH. First up, weed stocks. Those are surging today on headlines that President Trump is preparing an executive order to loosen federal restrictions on marijuana. A Washington Post report saying the administration is expected to push for reclassification of cannabis from Schedule 1 to Schedule 3. Now, that's a move that has long been awaited by the industry, first of all, and it's one that would ease oversight, lower taxes, and make financing far more accessible for the industry. Tilray's up sharply, joined by Canopy Growth, Aurora Cannabis, and SNDL, all jumping double digits in a sector-wide rally. Analysts say rescheduling could mark the biggest shift in federal cannabis policy in decades, boosting the bottom lines of legal operators. Next up is Fermi. Fermi shares under pressure in pre-market trading, down more than 40%. The company revealed the first tenant at its Texas Matador project is terminating its construction funding agreement. That tenant previously committed up to $150 million in advance payments to support build-out, though none of those funds were ever drawn. The company says lease negotiations with that tenant are still ongoing, and that it's in talks with additional prospects for 2026 power delivery at that Matador site. And despite the setback, Fermi says it's still on track to meet its power delivery schedule for the project. Just a bit of background here. Fermi, remember, is the company backed by former cabinet member Rick Perry of Texas, and the company just came public at the end of September at a $21 IPO price. You can see the shares are trading well below that right now. Finally, we've got RH. Shares of the luxury furniture retailer rising after it delivered stronger revenue growth than its peers, even as tariffs and a sluggish housing market continue to pressure the industry. Third quarter sales rose 9% to about $884 million, narrowly topping estimates and outpacing competitors like Wayfair and La-Z-Boy, though earnings still came in below Wall Street's expectations. In a letter to shareholders, CEO Gary Friedman said the results highlight the, quote, disruptive nature of the brand despite the worst housing backdrop in decades. Shares did spike as much as 14% in after-hours trading, but they're only about 2.5% higher ahead of the opening bell. Well, the massive amounts of spending on AI data centers has helped to drive up prices of commodities and electricity, building materials, land. But that inflation could potentially pivot to deflation as AI productivity ramps up. Alex Morris back with us, FM Investment CEO and CIO. Now, we started to talk a little bit about this a few moments ago when you were talking about, Alex, betting on the sort of picks and shovels still of this data center build out. But you also have some interesting thoughts on kind of how this whole thing is going to progress. So the phase that we're in now, how is that going to work out in terms of pricing?
Sure. So right now we need to just build a lot, right? Just like when railroads came in, just like when oil started, needed massive build out of creation and then infrastructure for delivery. And we're just in the very early stages now of giving AI all of the material that it needs to really be this force for change, not for the next year or two, but for the next decade or two. And what we're going to see now is just the need and this rush to get as much content and as much creation and construction going as possible. And that's going to put some strains on labor market demands because labor isn't that mobile. It's going to put price increases on things that are really necessary for that, as well as talent, as we're now getting much more talented folks and need higher skilled laborers to do both the work of building it and the tech behind it. But that will ultimately, and we hope, give way to solving a demographic problem that the United States faces. And the rest of the world has faced this as well. We have a declining population, but this demand for 3% GDP growth annually, and we need to find a way to make fewer workers more productive, particularly if many folks are going to have more than one job, where those jobs, we seems like we have full employment, but we have a lot of folks who are doing multiple things. So AI is supposed to solve this issue, and the good news is early receipts show it can. But that isn't to say that the first few months or weeks and innings of this aren't going to be a little rocky as we work out where are these data centers going to go? How are we going to get them there? How quickly can the utility companies and all of the other supply chain manufacturers develop and deliver all of the materials that are needed? And it takes time. But the good news is it's a pretty efficient market. The economy has gone through this before. And ultimately, it's pretty healthy for growth in the long run.
Well, but there are a lot of wrinkles in all of this, as you point out, right? I mean, there's so many threads I can pull on in this discussion, but I'll just choose one of them. If in the shorter term or medium term it's going to still be inflationary, that then has implications, one would imagine, for the Federal Reserve, right? I mean, we already have to we're seeing the market kind of maybe change its expectations to some extent about how many more rate cuts we're going to get. But this, what you're talking about, seems to have implications for that as well.
Indeed, and Jay Powell's kind of made that pretty clear. We do see some disinflation, right? The introduction of one of the D words we don't want to hear a central banker use, but it's mostly in services and things outside of this. There's an appreciation that, and I think most of the folks on the Fed are somewhat worried about inflationary forces from this ramp up, both the demand for materials as well as labor costs that will start to go up on the back end of this. So there is definitely a need for this to be married with a restructuring of the labor market. And I think we saw that in the dissents from the most recent FOMC. You have two folks who said, let's keep it where it is. Steve Myron obviously wants to make it much lower, probably much, much lower than where it is today. But the message there wasn't dissent and disagreement. It was, we agree that there are these forces, that inflation is a risk, and then we do have a cooling labor market. It's which is more important for us to solve today. And the Fed, the FOMC voted pretty well with that group has been working on fighting inflation together. And it seems two folks voted to continue that fight. But over time, with unemployment going up, which may eventually happen, with restructuring of the labor market, which means folks are out of work for a period of time, maybe longer than they're comfortable with, that we will see the Fed need to do that. But keeping those two things in balance is the exact experiment of the central bank. And it's certainly a lot harder than it looks. And I think you can see that on Jay Powell's face earlier this week, and certainly in the change of his countenance from when he started his renewed term as chairman.
All right, Alex, we got to leave it there, but we'll catch up with you again soon. Thank you. Coming up on Yahoo Finance's opening bid, our executive editor, Brian Sozzi, is with us now. Soz, what's coming up?
Lots going on, Julie. We're going to count down further to our reveal, the big reveal of our Company of the Year award winner on Monday. I am psyched to talk about all that. Also psyched, Julie, to talk about this Lululemon CEO shakeup. I'm really fired up about it. I need to bring down the energy just a little bit, Julie, because I can't stand it. This should have happened years ago.
Yeah,
that's all I'm going to say.
You and I were talking about this a little bit offline, and I did see analysts this morning said, they were expecting him to go, but maybe not this early, actually. So, definitely seeing some enthusiasm about that. Are you an HTT Lulu today?
I'm not wearing anything from Lulu. And that's the problem, Julie. I've been going there for about 2 years, coming out empty-handed. I'm tired of Lululemon wasting my time. Wow. I don't have a lot of time, Julie.
We got the HTT.
None of this is Lululemon.
We got jeans
Levi jeans, Ralph Lauren pulley, hood over, and a Banana Republic sweater, Julie. Nothing on Lulu.
Wow, okay. I hope that message is beaming right into the Lulu executive office or board.
In a bad mood.
As they figure it out. Don't be in a bad mood, Sauce. It's Friday.
Bad mood.
No. All right. That does it for Morning Brief, presented by Robinhood. Join Brian Sozzi in his bad mood for the next 30 minutes. He'll cheer up, I promise.